This is our online publication of our program guide for the Rural Development Department. I've got the page open to the Enterprise Zone tax credit to introduce to you some of the details of it, of the program. And I'll do this quickly as we get ready to turn this over to Jim Grover. But as an introduction and as a reminder also, the Enterprise Zone tax credit is established within cities of population of less than 20,000 and or counties with a population of 70,000 or less. Certain types of businesses located within these established enterprise zones can make claim on tax credits. There's two forms of tax credits that may be claimed by businesses. The first one is capital investment claims. Here's some examples here. A tax credit of 25% of the first $200,000 spent on rehabilitating a building that has been vacant for at least 2 years. Another example, an annual investment tax credit of 10% on the first $250,000 invested, and 5% on of the next $1 million. So far as job creation is concerned, you can see that up to 30 full-time employees may be claimed per tax year for these incentives, such as a $750 tax credit for each new full-time position that's created within the enterprise zone and filled for at least 6 months, an additional $500 credit based on the amount that you pay your new employee, $750 additional if it adds value to agricultural commodities, and another $200,000 for $200, I should say, tax credit for 2 consecutive years for each new employee insured by the company that's making the claim. So the enterprise zones are established within municipalities and within counties, and all of those zones are mapped, and I will bring up locate.utah.gov. We are currently going under some revamping of this map, but here's the example of the current map. I've got locate.utah.gov open. I've got the red tab, Economic Development, the tab open, and the box checked at Enterprise Zone. The enterprise zone then populates in red. Anything in red that you see is a designation of a current enterprise zone. If you zoom in, you will also see you'll see the name of the designation. This is Midway. I'm circling here. Their terms are from 2017 through 2021. And a business within that red sector may qualify to claim tax credits. So at this juncture, I would like to turn the screen over to Jim Grover, and he will become the presenter.
All right, thank you, James.
You bet.
We'll wait for just a minute to share screen here. Okay, wonderful. I hope you can see an opening slide here. That was a wonderful presentation, James, as an introduction to the Enterprise Zone tax program. Just for a second, if you would indulge me, I wanted to introduce myself a little bit to the group. I don't think I've probably had a chance to meet everybody that's online. My name is Jim Grover. I'm the Director of Compliance at the Governor's Office of Economic Development. And just kind of as a ways background, I've been in state government for approximately 10 years and have been with the Governor's Office of Economic Development for 2 of those. I've got a Master of Business Administration from the University of Utah, and I'm a certified financial government manager from the Association of Government Accountants. And so I appreciate the opportunity I have to be here with you today. I just wanted to make sure that everyone's aware, just kind of this, wanted to provide this disclosure statement, a little bit tongue-in-cheek here, but I wanted to make sure that everyone understands here, this information presented is to assist entities to make their own judgment if they're eligible for an incentive, in this case, the enterprise zone incentive, and that we're going to help them successfully gather the correct material and apply for the incentive. This presentation does not provide guidance or assurance of qualifications or the amount eligible for a tax credit. And the presenters, such as myself, reserve the right to provide additional or amended guidance in the future. And GOED reserves the right to determine qualification and tax credit awards as providing Utah code. And so we're going to jump right into it. Some of the things that I want to talk about today, and I hope that we can achieve by the end of the presentation, is the who, what, where, and how the enterprise zone works. So we're going to jump into like the different avenues in which you can apply for the various opportunities there are. We're going to become a little bit more familiar with the map, and we're also going to bring up the application portal and be able to walk through it and maybe even provide an example of an application. What happens after you apply? There's a time period in where we are working hard on your applications, and we might contact you and how you can help us provide you a tax credit after your application. What is a tax credit certificate? We're going to talk just very quickly about how to use it. We don't provide very much guidance. We're not tax preparers, nor are we the Utah State Tax Commission. So we can provide you a little bit of information about it, but some circumstances and some business entities and the way they're set up, it's best that a tax professional goes through some of that information. So we'll also take questions either during, if you'd like to put in the chat box your question. There's also a section within our website, business.utah.gov, of frequently asked questions. And so kind of wanted to talk about who we are as compared with the Office of Rural Development. As James just went through, the Office of Rural Development works primarily on promotion, helping the awareness of the program, and for the Enterprise Zone Tax Credit Program, they're working with cities and counties to help them establish the enterprise zones, and then also manage the areas. And once a city or a county establishes a zone, to be able to document that. And that's extremely helpful for us as we go through the compliance process and we look at eligibility. We look at the maps that are created through that process. So compliance, we're basically this group within the administration of GOED that looks at lots of different tax credit programs. Approximately this last year, we've done 950 assessments. The largest portion is the enterprise zone. We have a pretty wide gamut of programs, including the EdTIF program. We're looking a little bit more at opportunity zones, and we have a wide gamut of programs that we work with. And so we work to review and act in accordance with law, administrative rule, and contract language to assess, document, and provide tax credits or cash payments for GOED incentives. So that's how we fit in with the picture. So here's some of the basics. If there's one slide that you want to take away from today, there is the who, what, and where can we find enterprise zone information. So as James went over, who can apply? An entity within an enterprise zone is eligible. And you'll have to know that, like, when you take a look at eligibility and you look at the map, there are certain years that you'll want to make sure that that you're looking at properly. We'll get into that a little bit more closely as we look at the map. But there's enterprise zones that do phase in and do phase out during certain years. And so if you're applying, for example, for 2018, you'll want to make sure that you're looking at the 2018 map as cities and counties set up their enterprise zones for a 5-year period. One thing that we look at in particular when it comes to eligibility is we want to make sure that non-retail or a public utility is awarded a tax credit. And so some of the specifics that we're looking for is, how is an entity registered at the Division of Commerce? We also take a look at the title, and we look to see from Google Maps if there's a storefront in order to determine if it's a retail business. What's interesting about the tax credit in particular is there's a section in code that says that you may or may not have employees. As we take a look at this tax credit really is geared towards small business. So as you look at like an entity that can apply, so it can be a sole proprietor, it can be a very small group, and then you can have employees. And one thing that we take a look at too is on occasion when it's a very large company and they have like they have footprints across the state, is we start to ask the question, according to statute, if 51% of the employees reside in the county or the immediate adjacent county within an enterprise zone. I think that basically is helpful for us to make sure that we're awarding to a tax credit to a company that is within, that just didn't move a piece of their entity into an eligible zone in order to qualify. We're basically looking to see if their home base, to use a lack of a better phrase, is within an enterprise zone. The next section of the what can be claimed. Qualifying investment is the language that we have in statute. And so, as I put my accountant hat on for a minute, a qualifying investment is property, plant, or equipment. It's also known as a fixed asset. Therefore, if it has a useful life of more than, and it's determined, more than a year, if it has a certain dollar value over, sometimes different entities look at $1,000, some say $5,000. Basically, if it's something that has a useful life and it has a material amount of cost to it, it's considered a fixed asset, and it's a depreciable item. And one thing that pops up every now and then is different entities will buy, let's say, they'll buy a building with land. Land is not a depreciable asset, but the building is. And so we can determine the percentage of the price as for what the building costs and what's the depreciable value of a building. Qualifying investment can also be considered if you have a asset, let's say you have a truck, and you have a significant amount of cost into maintaining that truck. In other words, the technical term is the betterment. So if you're putting a new engine into a truck or something, bettering a asset, that is something that's also eligible for a enterprise zone tax credit under the investment credit. Something that's very close to, but has more rich benefits, is the renovation of a building. We can talk about that a little bit more, but there's a certain criteria of information that we have to receive from an entity in order to understand, okay, was the building really not occupied? What went into the building for the renovation, as in like the amount of work, and is it now occupied and placed in service? And so there's a little bit extra information that we have there. We're going to touch on the full-time employee just for a bit, but we're going to focus on primarily the qualifying investment and the renovation of buildings with most of the information that we're going to talk about today. So there are really good tools that we've provided for you. James just took a look at the map for a moment or two. We'll kind of work through the map a little bit ourselves with this presentation, but locate.utah.gov is your friend. That will help you determine if you are within an enterprise zone and if you are eligible. We also have a portal and a lot of information that's in business.utah.gov under business resources, rural development, and enterprise zone. So I'd like to try and kind of deep dive a little bit more into these different types of enterprise zones. The capital investment and the rehabilitation of a building is by far the most popular and most used tax credit for the enterprise zone. This capital investment piece, we just talked about the purchase of a qualifying investment. Again, it's if you have like a client that is just say they bought a particular asset, we take a look at the year of when it was purchased, and in some cases where it's a multi-year acquisition, so the example would be the building of a building, we look at when, say, the building was placed into service. That's, you know, if you have multi-year projects, we take a look at like, okay, finally when it's said and done, what is the actual acquisition cost of that investment? So it can span several years, but once it's placed in a service is when we consider, okay, you can qualify during that tax year for that information, or for that asset. One thing that's very important to know is the capital investment as compared with the rehabilitation of a building is a little bit lesser of a amount that you can receive as a tax credit. So the first 10% of the first $250,000, and then following that 5% of the next $1 million, basically caps at $75,000. So if you have businesses that are doing very large, like multi-million-dollar investments, and they do it all within 1 year, it's helpful to know that the maximum a certificate can be is $75,000 per year. Which is very helpful to understand when you have rehabilitation of a building. It's a much richer investment, 25% of the first $200,000, and then at that point it switches into that capital investment portion, and so it's a very rich benefit when you're rehabilitating a building. So some of the specific documentation that we look for is it's sometimes on a case-by-case basis. We have to work with an entity that is rehabilitating a business. The first thing that they have to do is they have to actually show that a building was not occupied. What's very helpful is if an entity has a relationship with their local city, in understanding and being able to prove documentation that no one had owned that building, it was unoccupied. Sometimes that has to do with can you provide documentation from, say, a water bill, or basically in order to show like really there was no activity that was going on, and look, it's documented through like a third party that there was, there's very little power that was paid, there was very little water that was paid, and sometimes even pictures can show a lot to the fact that here's something that is unoccupied and needs to be rehabilitated. It's also helpful as you're putting together documentation to show that yes, the city has a certain point where we put the asset into service. That can be when a city walks through and they give you an occupancy permit. That makes us feel much better that is a building that has actually been rehabilitated. And it's great. It's great to have like that full source of documentation, especially since this is a much richer benefit than if you would just go through the capital investment portion. The employee credit, we can just touch on for just a moment. What we're looking for is we have information provided from a partner, the Department of Workforce Services, that we can actually look at an entity and we can see the number of employees that they've had during the highest count during the previous couple of years. And basically what we're looking to see is a company applies to see how close that information that they're providing is with the Department of Workforce Services and the number of positions. Additionally, we're looking to see that in the tax year, which they're applying for the tax credit, is we're looking to see if the number of positions have grown. And if we feel that those numbers are within a margin of error, we feel comfortable, and then at that point we start looking at the new growth. So we'll look for them to demonstrate the number of new full-time employees. That can have to do with some documentation, end-of-year returns, W-2s, whatever is helpful in order for pay stubs, in order for us to understand that new employee was a new full-time employee. Some companies will grow really fast. The statute does max out that you can apply for only 30 employees per year. The base amount for the employee portion of the tax credit is $750 per employee, and there's additional increases that James talked about a few minutes ago about if they are paid at 125% of the county average. There's sometimes some bump ups for if they are involved with agriculture, and there's also a 2-year period in which they're eligible if you provide health care benefits to the employee. So I think now's a good time to take a look at one of the tools that we have that we're working on in particular. Let me slide this over. I hope everyone can see this map. Let me know if you can't. This is the locate.utah.gov map, and this is actually something that's in the test phase right now. We found it to be very important as we've been looking at enterprise zones, and since GOED has received this program starting in 2016, in addition to that, cities and counties may have enterprise zones that are coming online starting in 2018 that were not originally in 2016 or 2017. And again, there's enterprise zones that have been they've reached their 5-year time period and they haven't renewed. So we're looking specifically at using this drop-down menu to understand. So we still have entities that are coming to us to say, hey, I just found out about the enterprise zone tax credit. I would really like to apply retro 2016, 2017, and then the last year, which was 2018. How do I know which map applies to me? So basically what you would do if you were applying for a 2016 enterprise zone tax credit, you would click on the 2016 map and see at that point you fall within one of the areas that would qualify for an enterprise zone. What's very interesting about this is, yes, these zones do change with time, and so that's one really important thing to pay particular question to and attention to, is that you're selected to the right year as you're looking at the map. One thing that is helpful for us too is we recognize that sometimes an address does not particularly map well when you're looking onto this address. Sometimes it's helpful to have a Google map on one side of the screen and locate.utah.gov on the other side, in order to triangulate and understand where you are accordance onto the locate.utah.gov map. We know that there are some addresses that can't be found, but that's been very helpful for us to make sure that we do our best in finding the entity's address and to qualify them or to not qualify them for the enterprise zone. So let's keep moving on for a moment. Once an entity has taken a look at the map and they feel comfortable that they qualify, I think it was very helpful that once they feel like they're comfortable with proceeding, that they're gathering the amount of documentation that GOED needs in order to qualify and to do an assessment and to provide the correct amount for the tax credit. Basically what we're looking for is we're looking for purchase documentation and we're looking for payment documentation for purchases more than $10,000. So let's talk about purchase documentation for a minute. So purchase documentation is important to us because it identifies who bought the item, what the item is, when it occurred, and how much was paid for the item. This is very helpful for us to understand. We will have questions on occasion when an entity such as a, let's just say a partnership or an LLC applies for a enterprise zone tax credit, but then we'll take a look and we'll see on an invoice or a bill of sale an individual's name. We'll sometimes have questions back and forth to, well, now who is that individual again? Like, how does that relate to the LLC? And so that's always helpful to understand, to help us understand exactly, you know, when it comes to who is actually buying it, and then ultimately, at the end of the day, if it's a business asset or if it's not. One thing that helps us too is the what. We're very particular to make sure that these items that are being purchased are actual, like, physical, tangible items. I know some things that have popped up in the past is like software as a service. Some things that pop into, like, if you have a monthly or a yearly subscription for software, those types of things are not actually owned by you and is not being considered as an asset. So there's some things that are important to us to understand about the what. When we want to make sure that the purchase occurred in the right year. Again, if it's like a building and multi-year, then, you know, that would be a very helpful for us to understand that the asset took several years or it crossed years in which it was acquired. And again, yeah, how much was actually paid for the item, or how much is the asset worth? And those things can be supported by providing an invoice, a bill of sale. Vehicles, I know sometimes this is hard to actually keep a copy because you provide it to the Utah State Tax Commission when you receive or when you apply for a title, but the bill of sale is very important. I think that's helpful to have. A contract of sale, sometimes a receipt, even though it's not an invoice and it could be potentially documentation for payment, but that can be helpful if that has the same amount of information as the who, what, when, and how much. And when we're talking about property and buying a building, the property tax notice is very important for us because that will help us determine the correct percentage between here's the purchase price, here's the price of the building, and here's the price of the land, and to be able to split the percentage of the price of the building versus the price of the land, and to be able to make a determination on that. This repayment documentation for purchases more than $10,000, this is something that we put in last year that we found it to be very helpful. As small business has been purchasing items that we found that businesses have purchased either really expensive assets or they've purchased smaller amounts for either betterments of a building or just lots of transactions that are less than $10,000. We felt that it was very difficult sometimes for a business to be able to provide payment documentation for every item that costs $10,000. At one point, we were receiving potentially 50 to 100 Home Depot, Home Depot or Lowe's invoices with payment documentation for just the betterments of a building. And that got to be very difficult for the claimant in order to provide that amount of information. So we put that threshold at $10,000, and perhaps this might change up or down, but that's where we have it set for 2017 and 2018. So what we're looking for is we're looking to make sure the transaction actually occurred. We've never really come across one, but there are chances, there are ways that people can receive an invoice, but they might not follow through with the transaction. We want to avoid that kind of a risk, and so what we're looking for is we're looking to see if the transaction had occurred through a cleared check, any type of loan documentation or financing agreement. Sometimes we recognize that bank statements is sometimes the only way after so many people are using debit cards or Visa cards to finance things that's helpful. A bank or a credit card statement can suffice for payment documentation. Okay, so let's go for a second to the application portal. This is what we're looking for, and let's navigate to it. It's 2 or 3 clicks in, so let me bring this back over. So welcome. This is the Utah Governor's Office of Economic Development website. This is the landing page. Where we're going to go is down to Programs, Rural Development, and once we're to Rural Development, we're going to scroll down. These are the cornucopia of tax credits that the rural team oversees. So we're going to click here on the Enterprise Zone tax credit. We've got some information here, many of the items here we've talked about today. We're going to click on this section right here. We're going to focus mostly on the capital investment credit. This will also be for the rehabilitation credit. It's applicable for both those items. And so when you click on that, basically you'll be brought over to a form. This will start the process of intake of information of an entity that we require in order to process an enterprise zone tax credit. First thing that I think is very helpful in case you're realizing that you need to come back later, go ahead and click on this information, this button right here, and that will save your progress just in case you're realizing like, oh, I need to stop on something and I'd really like to come back and not have to start over again. So that's a very helpful button. For today, I'm not going to do that for purposes. Helpful to read through this. It's talked about this is the enterprise zone map. There's some applications here. There's some additional information, but mostly let's take a look at these 2 things right here. This is the building rehabilitation tax credit application. So this is like if you were just going to do the building rehabilitation, you would look through this section right here. If you were looking for this qualified investment tax credit piece, you would take a look at it. Just do these 3 things right here. Information about required documentation we touched on, and then here's a little bit more information on the steps that we would like you to perform. But let's go ahead and do this. So we're going to download this investment tax credit. Let's take a look at it for just a moment. So what this is a list of the items that you're looking to claim as eligible items for the enterprise zone tax credit. So you'll place your company's name, business address, and the tax year. At that point, a description of what was purchased and what kind of documentation that you have. Example would be invoice, bill of sale, contract of sale, the things that we talked about. If there's any kind of reference number on that documentation, it's helpful for us. When it was purchased, the year it was placed into service, and what we're looking for here is if the year placed into service was also the same as the entity's tax year. We're looking to just, kick some tires there to make sure that that's correct. And then the item cost. You'll notice that as let's make this enabled for editing. As you'll notice, you place numbers in here. As for the item cost, that you'll see a calculator up here that has a summary of the investment tax credit, that if we found these items to all be eligible and for the correct amounts, that's likely what the tax credit would be at the end of the day. You'll notice also, let's see if I can up it to more than the $10,000 threshold. It's now asking you here for secondary documentation. So on this point is where you would provide us payment documentation, bank statement, check, financing agreement for each one of those items. Very, very helpful to have. So you would continue to fill this out until you reached the items that you feel eligible for the enterprise zone tax credit. And here's some additional information too that we've talked about, but it's just a great reference tool to understand some of the basics of depreciable property and what a fixed asset is and the amounts that can be qualified for. At this point, it's very helpful once you have this to save it and to set it aside. I think it's also very helpful too if you have basically the documentation that you've collected on these items, the supportive detail, to put them in order. I think it helps everyone else out to, like, okay, first item on the list, and we required the payment documentation. Here's your first PDF, your page of your PDF. Here's your second page of your PDF, and just make your way through. I think it's very helpful, especially if you have multiple lines, in order to organize those things. So we just clicked on this template. Once we have this filled out, there's a letter of certification that we're looking for. Basically, this is your attestment that what you're asking for tax credit is true and correct. So in other words, this is the name of the officer, title, applicant, the enterprise zone in which you're located in, the type of entity, tax year, and at that point, the amount that you're going to claim. This amount that you're going to claim is going to be, it should match up with the amount that's on the investment tax credit. And if you also have an employee tax credit too, you can have both of those items on there. So once you have those two documents filled out and completed, you can advance through the next page. There's just some questions. It's an intake form for us to basically identify and to put into our system exactly what we're looking for. Let's just go ahead and fill one out so I can get to the next page. We're going to be not an estate, I think that's far and few between, but we're going to be a sole proprietor. We're going to do farming. That is a very popular segment of the business. Does the entity conduct business? Believe it or not, yes. When we do within an enterprise zone, and we are an other business. We are not doing retail. We are not doing any of those things that would be off limits. We are not. We didn't have any businesses close or any portions of our business close, and we are not going to be claiming a targeted business tax credit. That's one thing that is in statute, is if the targeted business tax credit is being used within the same year. At that point, oh wow, look, it looks like I'd throw in an old department that I used to work for. But you would continue to fill out this application. Provide us a NICS code. Now, this is a NICS code that is associated with if you go to the Department of Commerce and do a business entity search with the name of your company, or if you needed to go in and look at the NICS code that might apply to you, you can go here to this website. Provide us your company's EIN. If this is an individual, we would request that you provide your social security number. What we do with this information is this is transmitted to the tax commission on a quarterly basis to let the tax commission know, here's the entity's name, here's the tax ID or their social security number, and here's the amount of the tax credit that was issued to them. We asked for some information here about where you're located, and it's not going to let me because I haven't filled this out completely. But if I were to go on to the next page, it would have me upload my documents and to certify and to submit the form. So those are the basics and what this form looks like. It's really not a bad process. 3 pages and you're in through. So as you submit your application, what happens? Basically, what we're doing at that point is it's a first in, first out approach. We receive approximately 750 to 800 of these enterprise zones a year. And so we will get to your enterprise zone. We have a goal to process each enterprise zone within 4 weeks. We recognize that, especially during the busiest time periods, which is about now and next month, as people prepare for their April 15th filings, we will try to turn those over as soon as we can, like it's all hands on deck kind of a situation, in order to provide you 4 weeks service. There are some times where we can get it done before 4 weeks, but please allow us 4 weeks in order to do that. During that time, we may ask for additional information. We might ask for follow-up information, more documentation. But most of the time, I'd say maybe like 75% of the time, the information that we receive is complete and we issue a tax credit fairly quickly. The biggest thing here, don't file your tax credit, your taxes until you're rewarded with a credit. Sometimes there are adjustments. I just don't want to see anyone get into trouble by applying for a tax credit, putting down the amount that they believe that they would be awarded, and then having an adjustment or something found on our end that would make an adjustment. That makes a very difficult situation, I think, for both the claimant and also GOED. So please don't file your taxes until you're awarded. We also would ask that you keep your tax certificate with your tax records. The tax commission may ask for it, and we've been talking with them just to learn about their process a little bit. They've identified to us that as long as you have a tax certificate, that's the most the tax commission will do, is to just ask you to produce it. If you claimed an enterprise zone and you don't have a certificate, that's what may trigger an audit, according to what they've told me. So that's an important piece of this step. As to how to use your tax certificate, again, there are some things that you'll want to take a look at. You have the opportunity to use the tax credit in the year that you made the the purchase. So in other words, if this is a 2017 that you claimed for, you received a tax credit for 2017. You can also use that for 2018 or 2019. You're responsible for keeping track of the years in which you use that tax credit. Other than that, I actually can't provide any more information as I'm not a tax preparer working in your behalf, and I know that every situation is a little bit different. So please ask the tax commission or your tax preparer on how you can use your tax certificate. This is a great time, I think, for questions. Again, there's also a really good section within our website in which we have lots and lots of question answer sections. This is actually in dire need of having like an update. I've noticed a lot of redundancies in some of these questions, so I think it can be cleaned up a little bit. So maybe looking forward to doing that in the next couple weeks or months. But there's lots of questions on here of, you know, just the basic how-tos and our recommendations for those things. And if there's any questions here today, I'd be happy to entertain them.
Jim, you've done such an amazing job. It doesn't look like we actually have any questions.
Okay.
So
That's great. Thank you.
Yeah, this was so informative, and I learned quite a few things myself. So, Jim, thank you so much. In wrapping up, if anybody does come up with questions, please don't hesitate to reach out to our rural development team, and then we can hopefully answer your question and or get Jim Grover involved as well. So with that, we still don't have any questions, Jim. So thank you all for participating. We appreciate your attention. We will be publishing this recording and the presentation on our Enterprise Zone webpage. So check back there if you'd like to encourage some of your partner CPAs to get out into the weeds on this issue so they can service their clients as well. Again, thank you so much, and we will see you at Rural Day on the Hill.